Couple disclaimers before we get into the video. Obviously, we are not your financial advisor, and any information in this video is for educational purposes only and does not constitute advice. Hey, it's Ryan from the Dividend Investors Club. This is a 2-minute trade idea where I give you my 2 cents on a stock in 2 minutes. Today, I'm going to talk about Walmart. There's a lot of you asking about it. It's down 10% today because they did miss earnings this morning. They missed Q4 estimates, and their 2018 guidance was not great, so it sent the stock plummeting. Now, look, this is a stock that has moved up about 50% in the last 12 months. So it's had a huge run, price to perfection. We've seen this before in this earnings season. These stocks that have run up huge going into earnings and they don't have blowout quarters, they tend to get punished. So kind of what you're seeing here in this chart, this was kind of the correction, kind of area. So it kind of sold off there, but this is the big drop today, right? So we're down about 10%. It's kind of almost, closing this gap here. Right now it's holding up, so that this is an area to keep your eye on, this 95 level. But if it goes below that, I think it's certainly going to close the gap, kind of head into the low 90s, potentially, maybe test this 200-day moving average. So, again, this is a stock. We'll look at the stock profile here, but this is a stock that's definitely been priced to perfection. You can see, this is as of the close on Friday. These are the rankings as of the close. You can see okay safety, awful value. Again, the stock has run up. We had a profit rating on it, which again, doesn't mean necessarily sell, but it means, be cautious. This thing's had a run. This is a time to potentially take, a little bit of your money off the table. I never really recommend selling all of a good long-term position, but there's no reason to not take some profits, at certain levels, and that's what this profit rating means. And so you can kind of see that's where it was, going into earnings. But you can see this stock has dropped below a 2% dividend yield, and let's take a look at the value and kind of where it was, and there's really no surprise why it sold off. So you can kind of see, in these total return and valuation summaries here, clearly it just had an incredible run, right? 52% over the last 12 months, and you see the valuation. This is not what you want to see, valuation-wise, with the stock you're holding. It just shows that it's kind of overvalued. Again, priced to perfection, and it's kind of setting itself up. If it doesn't continue to, exceed expectations on earnings, the stock is going to get hit at some point, and, valuations are going to come in. But you can see here, huge premiums to their historical average multiples on the valuation side. This is a stock that has historically been about a 2.6% dividend yield, and it's down below 2% right now. And so, again, it's a dividend aristocrat, but the yield is kind of in a spot where it doesn't make it too attractive to new investors. And you see it's a flat performer. If you look at just this annual sales and EPS here, it's definitely a flat performer. They've been spending a lot of money to try to keep up with Amazon. I think that's what's hurting earnings a little bit, and it just hasn't come to fruition yet, with new sales. And so that's kind of the picture there. I do think there's probably a little bit more downside here, and I think there's better places for your money. Again, looking, that chart we pulled up earlier, I think it probably could come down to the low 90s, maybe even the mid 80s, before I think the selling's done here. And I think that's probably an area that maybe you would want to potentially get back in. But again, this is not a great dividend grower. This thing's only, been increasing its dividend 2% a year. You can see right here in this chart. So, there's better places for your money, I think, for new money, especially with the sell-off recently. I think there's a lot of other good values out there. So I would stay away from Walmart for now. I think it needs to come down a little bit more, and that's my 2 cents in 2 minutes. I think we all know that the stock market can be a scary place, especially if you're trying to go at it alone, but you don't have to do it. You don't have to be there alone. At the Dividend Investors Club, it's a community of investors. We're working together to grow and preserve our wealth. So if you like this video, please check us out at dividendinvestorsclub.com. Consider joining the club and joining us, and definitely subscribe to our YouTube channel by clicking the subscribe button below this video. Take care.